Hey guys, All in Crypto here, and welcome back, ladies and gentlemen, for another YouTube video. Hopefully you've all had a triumphant Tuesday. We're going to be diving straight into the cryptocurrency market, as today could potentially be brutal. There's lots going on, guys. Ultimately, yesterday the market did see quite a nice rally, and that was really, on a festive period. It was the 4th of July yesterday. Markets were very low volume, i.e. it doesn't take a lot to move them. The danger that you have today is you've got your US stock market opening. So that could see rather a negative opening. And it could come on the back end of the dollar, the DXY, which is a way to look at dollar strength, now putting in a new high. You could get a new weekly close. Certainly if you look at it on the daily, you're likely to get a new daily close. And we've already had a new hourly close within this trend. So the dollar is really showing strength. That is typically very bad for Bitcoin, for your risk assets, because, of course, it's BTC USD, So it's not going to be a great day, I don't think, today. And we have said, look, festive periods, what typically happens is you'll get a move on low volume, and then the overall trend, which is a downtrend, will resume. This is very low volume. Very, very low volume. Look at consequently where the volume showed up. We're keeping an eye on the force index and a number of other things. Your volume's really all to the sell side. And this is, in terms of a consolidation period that is happening on next to no volume. Look at where all the volume is, guys. You can see your volume's on the down legs, consolidation with no volume, consolidation again with no volume, down leg, volume. It's a very much a seller's market. There was some news today that 80% of the weekly inflows were essentially made by, or were shorting positions by institutional investors. But we will cover that. But ultimately, I think that it could be a rather brutal day. We spoke about the fact that typically in a downtrend, your periods of consolidation in a trending market get shorter and shorter. So you can see you had this one here, which was 100 and something days, 106 days. This one, I believe, only took 30 or so. Around about 32 days. And, we're coming very, this is, I think, is going to be a smaller period of consolidation that ultimately leads to a roll. And today we could get some sort of a roll, or at least a retracement of whatever gains we put in yesterday. I don't want to be bearish. As much as I enjoyed seeing yesterday's pump, I kind of feel like it gives people false hope. And you get these YouTubers that show up time and time again. Every time we enter a period of consolidation, they're calling for a bottom. Or on Twitter, and I understand that you're bullish, and I'm very, very bullish on the long-term prospects of blockchain and crypto. Ultimately think, Bitcoin's going to go well above 100K into the future, and many of your altcoins are going to do absolutely spectacular. But right now, you've just got to understand the gravity of the situation we're in. Again, to stress the point that this is the first time in Bitcoin's entire history that it's potentially going through a recession. Not sure what I've drawn on here, but I'm going to pull this up again because I need people to absolutely understand this so that I can keep them as safe as I possibly can. This was 2008. This is what markets have done since then. Let's get Bitcoin up and put it over. So yeah, Bitcoin's had its own cycles that have been driven by the 4-year cycle theory. We've covered this, and it was a big talking point that I made when I started this channel over 2 years ago now, nearly 3 years ago. Because we followed the Bitcoin 4-year cycle theory. It's what allowed us to accumulate in 2018, 2019. And I think there's going to be an element of the halving that, really causes a supply crunch. The price has to adjust, otherwise miners just won't mine it. And we're seeing huge miner capitulation at the moment anyway, which we've spoken about. But ultimately, I don't think a recessionary period is good for business. I don't think it's good for anything. And I certainly don't think it's going to be good for Bitcoin, certainly given its correlation with the NASDAQ and the S&P, which I think have a lot more pain to come. And we've got some significant events for this month. It always amazes me. Markets are so psychological. I'm reading a book on psychology of markets at the moment. I've ordered so many books. I mean, reading is, some people say outdated, but for me, if reading a book sticks in my head a lot more than just watching a video on something or listening to an audiobook, which is fantastic given the fact that I'm dyslexic and don't really enjoy reading. But ultimately, it really amazes me how whenever there's a bit of green in the market, people's biases shift. You need to have a plan. You need to understand and accept the fact that you could be wrong. And if you are wrong, you'll adjust your strategy accordingly. Hey, we thought 2021's bull market was going to continue. If only in hindsight we had paid attention to the macro. We've had some brilliant people that have really educated me and you guys, I believe, on this subject on the show. You know, we'd have known that was maybe time to get out. We're not going to make that mistake again. We're going to be paying full attention to the macro. We've got some key macro events taking place. We will get into some news, guys, because Celsius seem to just continuously lower their liquidation price. We know that actually, I think it was Cardano Paul or Cardano with Paul on Twitter that basically said, look, why has Celsius moved 50% of their Cardano? Where have they moved it to? And he's going to follow that up today, which will be interesting. But ultimately, you know, we've got some key macro events taking place. We've got 4 that are stated here. There's more than 4. We've got various speakers. We've got something coming out on Wednesday. The minutes, the FOMC minutes on the short term, they're very much just going to reiterate what they've already said, just like what Jerome reiterated at the ECB meeting. 4 important macro events in July that will impact stocks, Bitcoin, and crypto. We've got the CPI print coming on the 13th. I think the consensus for this is around about 8.7, which is 10 basis points higher than the prior one that we got. You've got the July FOMC meeting, which is coming on the 26th to the 27th, so it'll be a 2-day event. And then you've got the GDP estimates. So I believe we already are in a recession. Recessions are called after the fact. It's not a hard call to make, given the fact that the first quarter that we had, we were negative 1.2. And this quarter, I think it's going to be negative 2+%. A recession is defined by 2 negative quarters. You always get, when a recession is officially announced, not that, you know, we can't all see it, a kind of a sell-off as a result of that. Because people go, oh, okay, well, we better get out the markets for a couple of years. I don't think it's going to take a couple of years to recover, by the way, guys. I think this market recovers a lot sooner than many people think, and the bull run comes back on significantly sooner than many people think. I just think that we have more capitulation to go, and bull markets are born out of bear markets. Sounds rather self-explanatory, but it's true. This was interesting. Nearly all of the equity drawdown year to date has been multiple based. Our EPS lead, based on rates, oil and dollar, etc., implies large move lower over the following 12 months. Next leg lower in equities will clearly be EPS driven, but only after price makes you think we're not in a recession. So this is the issue that I take with these pumps, which is why we maintain the kind of bias that we have, is that they give people a false sense of security. You know, there's not really much doubt at all, and my position represents this. You know, we're predominantly in cash right now. There's not much doubt at all in my mind that we see lower prices across the board for crypto. That excites me. That makes me want to, and hopefully you guys are on this journey with me. You know, get as much cash as possible to accumulate. It's always been about getting as much crypto as possible moving into the future. And yes, a hodling strategy over a 10-year, 5-year time horizon works to a degree. You know, if you look at the fact that you could have essentially bought Bitcoin back in 2017 and you'd have been underwater, potentially even today you'd have been underwater if you had bought the actual peak. But very low volume trades at the tops. Anyway, I'm getting off topic. Let's get back to the bulk of the video. Ultimately, we see a lot more downside, and I think today could be particularly brutal, certainly given how much strength the dollar has already shown us today. You know, we're on bond yield curve watch. The 10-year government bonds is having a bit of a pullback today, or the yields are, so the bonds will be seeing some sort of a rise. This is probably to prevent, as people are going, oh no, we don't want to bring another yield curve on because that's going to dampen sentiment even more. But we're seeing the UK stock market open negatively, seeing the futures for the S&P and the NASDAQ open rather negatively. It's going to be an interesting open. And typically on festive periods, when the holiday is actually over, the trend will resume. I'm short right now, and trading is something that I'm going to be teaching in my Patreon for anybody that wants to endeavor on it. The main aim and group of my Patreon is really to educate people in terms of investing, you know, bring up 100x altcoins that we think, and really get people savvy with all the material surrounding that. So is this potentially on the cards? I think so. I think my concern is that the NASDAQ has significantly lower to go. That's going to bring crypto with it. These major economies are heading into recession in the next 12 months. Nomura says. So people are just saying the obvious now. We know this is going to happen. Again, we've got people calling bottoms before the recession has even been announced. You need to have the recession, you need to see the capitulation, and then you get back in. You don't just use Elliott wave theory to predict every move in the market. TA works. There's no doubt in my mind that TA works, and it will help you on your investment journey. And if you learn it and you study it and you get good at it, you'll do significantly better than somebody that doesn't know anything about it and is just trading blind. The problem that you've got is it doesn't always work. So just because something has a probability of playing out in a certain manner and you're on your fifth wave, so you're looking for another ABC correction, or you're on your C wave of your ABC, doesn't mean that that C wave can't extend, or doesn't, you can't definitively call things based on TA. You can take your best probability-based guess that a market is going to go in a certain direction, but you don't know what the next Celsius or BlockFi is around the corner, or Luna. You don't know what that is. So stop calling bottoms, because it's embarrassing at this point. I've been a bottom caller. In the bull market, we called many, many bottoms, but we were allowed to do that because it was a bull market. You're looking for bottoms. Bottoms come far, far more readily available than tops. This is different. We're in a different market. This is why all your on-chain metrics got WWE slammed to the floor. Your on-chain metrics don't mean a damn thing in a market that isn't moving off on-chains. It's moving off of macro events. So stop. This is institutional investors shorting Bitcoin made up 80% of inflows, of weekly inflows. So this was last week. So they're short. Institutions are short. Somehow on Twitter, retail's long. Or calling for bottoms. Or your big YouTubers are calling for bottoms at this point. Why? Even if it is the bottom, I'd rather take the safety in waiting and seeing how it plays out. And okay, yeah, we might not get in at the perfect bottom, but we'll see this market turn. We'll see a pivot occur from a sort of macroeconomic and geopolitical potentially scale. Crypto lending, Celsius cuts 150 jobs amid restriction. Celsius have actually paid off significant amounts of their loan. Fun fact, Celsius Network paid a total of $120 million today on its Bitcoin-backed loan, dropping its liquidation price to 4,960. So I think Celsius are now safe. Isn't that ironic? I don't know what that means for the Cell token. We've actually not looked at the Celsius token, but we did look at it a while ago, potentially being a short, so it may have done exceptionally well. It was up 300% from its low, obviously with the fears of Celsius going insolvent, which still could be an issue. They've also paid their MakerDAO loans, their Aave loans, and I think their Compound loans. Problem you've got with DeFi is if you don't manage it and you don't understand market conditions and know when to get deleveraged and leveraged, you're going to end up, I guarantee similar things happen in the next bull and bear run to what we've currently seen. But ultimately, guys, I think we've rambled on for long enough. The pressure is very much to the upside here. And, on every pullback that you get, so this is where you made your low here. If you look this, then look at what you did on the pullback. Your volume continued lower whilst you're rallying. We've done all this plenty of times. Then you get another huge sell leg on increased volume. Come lower. Then guess what you do? You take an up move left and you take a rest on extremely low volume. Then we get another sell that we've just previously had. And then you move up on low volume over the 4th of July and everybody gets excited. Only for that to then roll over again, in my opinion. Doesn't have to happen. This may be the bottom, and I may be totally wrong, guys, but ultimately I don't think it's likely. And I think in terms of probability and being probability-based and taking a position according to that, I want to go to where there's the most probability of me being right. The most probability of being right and calling this a bottom. I actually saw somebody, probably shouldn't actually go into that, basically saying that, okay, well, this looked very similar to this. Maybe, and they didn't base that on necessarily TA, although it was a little bit of TA. They more based it on the fact that we're in the same monthly period. Could we see a summer run? We could, but ultimately, again, it's what's more likely to me. It's more likely we see downside than we see upside. And that is where we're going to love and leave you on this video. Ultimately, nobody's more bullish on crypto long term than me, but I think to call a bottom at this point or to get overly bullish based on a small percentage pump that was caused on very, very, in the grand scheme of things, small percentage, was caused on very, very low volume, is naive, foolish, and ultimately, for me, it's all about making sure people are safe in this environment and being safe rather than sorry. All I've got for you in this video, guys. If you enjoyed the content, like us, always appreciate it. So, a comment, and I'll catch you all in the next one. Thanks a lot for watching, guys.